tax and the new solidarity tax. Okay,
Okay,
Jordi.
yeah. Thank you, Ricky. Also mention that if you have any question, you can write it on the chat, and after the presentation, we will answer them. Okay. So first of all, I believe that it's important to have a clear picture of what being a Spanish tax resident mean, and there's two types to consider. It's for individuals and for companies. For individuals, as the Article 9 of the income tax return says, you are considered a tax resident in Spain if you meet one of the following criteria. The first criteria is if you live in Spain more than 183 days, so half a year, you're considered tax resident. Also, if you have your economic interest in Spain, you also consider to be a tax resident here. This means if your main source of income comes from business activity or activity performed mainly in Spain. And also the third criteria, it's an assumption that the tax authority makes here in Spain, and that is if your married spouse or your kids live in Spain, they could consider you also tax resident in Spain. But this can be proven wrong if you justify that you are tax resident in another country. This could be done by requesting a tax residency certificate from the country you're living in. And so if you are considered tax resident in Spain, you will be eligible for the main taxes, which are the personal income tax, the wealth tax, the inheritance tax, and the VAT. Then we have the companies. As stated in the Article 8 of the Corporation Tax Law, a company is considered to be tax resident in Spain if it meets one of the three criteria here you see. The first one, if it's incorporated in Spain, then the company is considered to be tax resident in Spain. Also, the registered address, if it's located in Spain. And the third one, it's maybe the one that could cause some trouble sometimes, is if the effective management is from Spain. That means if the director or the board of directors perform all their decisions and the management from Spain, the tax authorities could end up considering that company to be tax resident in Spain. And then if the company is considered tax resident in Spain, it will be liable for the main taxes of the corporation tax and the VAT. Okay, so now we'll focus in one specific tax, which is the wealth tax. This tax is maybe not the most known one, as not all the people need to file them. It was established a few decades ago, and it was designed to target the wealthiest individuals in the country to promote the social equality and redistributing the wealth. However, this tax has faced some criticism, as the people argue that it discourages the investment and entrepreneurship here in our country, making Spain less attractive for wealthy individuals to live and invest in. Well, and as a general rule, this tax applies to individuals that has a net worth above 700,000 euros. And this net worth, you should consider real estate, stocks of companies, bonds, and also cash and bank accounts. The tax is progressive, meaning that the rate applies to the basis is ranging from 0.2% to 3.5%. The highest bracket, it was increased last year from 2.5 to 3.5, and it applies to net worth over 10 million euros. Then the taxable basis, there are some exemptions of which asset you should include. For example, we have the primary residence that if it's valued in up to 300,000 euros, this amount will be exempt to include in the taxable basis. Also, you should not include the household goods and the pension plans, among other assets. The taxable base is determined as of the end of the natural year, so 31st of December each year. And the tax form, the Form 740, it's filed, should be filed no later than the end of June. So you haven't filed it yet. You still have 2 days to file it for the period of 2022. And another interesting thing to mention is non-residents, that they are also liable for wealth tax, but by what it's called real obligation, which means that they are only subject for the tax for the assets located in Spain. This will be real estate, the shares of a Spanish company, or the bank accounts located in Spain. However, there are some countries in which Spain has signed the double taxation agreement that mention a clause that allows only the assets relating to the real estate to be taxable. So the other assets in these specific cases won't be taxable. What we have mentioned so far, it's the general rule of the wealth tax, but this wealth tax, it's they have the state law, and then the different autonomous community have the ability to make modifications to this law, so it can adapt some of the elements of this tax. For example, the minimum net worth to apply this tax, also the tax rates and some allowances. As you can see in the map, the communities in yellow follows the general rule. So in terms of the minimum net worth, so the individuals with more than 700,000 are liable for this tax. And the autonomous communities in red are the ones that choose to reduce this minimum net worth, meaning that more individuals are liable for this tax as the minimum amount decreases. And also there's the special cases of Madrid and Andalusia that have 100% allowance, meaning that effectively they don't pay any wealth tax as all the taxable basis is full allowance. As you could see, this creates, some people argue that this creates a competitive advantage among the different autonomous community in the same country. And this is one of the reasons of the creation of the next topic we will mention. That it's the new tax, the solidarity tax on large fortunes, that was approved at the end of last year in December 2022. And this tax, basically, it was considered as a temporary tax that only will be applicable for the periods 2022 and 2023. To target the most wealthiest individuals in Spain. More specifically, the individuals that has a net worth above 3 million euros in the worldwide assets, and also the non-residents that have Spanish assets above 3 million euros. This tax was created also to make more equally the distribution of the wealth tax among the different autonomous regions to reduce the competitive advantage of Madrid and Andalusia and other communities that could change their tax rates and allowances, and also was designed to tackle the inflationary and crisis that was forecast during these years. As I mentioned, this is a central state tax, so there's equal for all the autonomous communities without considering the wealth tax allowances. And this form is filed, this tax is filed through the Form 718, that the period to file this form is between the 1st of July to 31st of July. So it is designed to be filed this way, as it considers the wealth tax that you already paid. Because you will be able to deduct that to avoid paying for the same asset 2 times. I think it will be clearer if we see an example. So in example number 1, we have a Spanish tax resident that is living in Catalonia. The net asset of this individual is 5 million euros with a main home of 500,000. And after applying the allowances and applying the tax rate, it will end up with a wealth tax liability of 63,000 euros. Then if we calculate the solidarity tax, the tax rate, by the way, it's between 1.7% to up to 3.5%. So after applying this tax rate, we end up with 17,000 euros. As in the solidarity tax, you can deduct what you already paid in the wealth tax. You end up paying 0 euros for the solidarity tax. You can deduct the full amount of the total amount of the wealth tax, of the solidarity tax. And this is made because Catalonia has wealth tax. But if you see the second example, an individual that residing in Madrid or Andalusia with the same assets, 5 million euros, and as it has a full allowance of 100%, 0 euros are paid for wealth tax. Then when calculating the solidarity tax, they won't be able to deduct anything, and they will end up paying this 17,000 euros for this tax. So as you see, before the implementation of this new tax, wealthy individuals didn't pay anything in Madrid or Andalusia, and after the implementation of this tax, they will pay not the full amount of wealth tax, but a little bit more than 0. And now my colleague Ricky will continue with the presentation.
So thank you, Jordi, for your explanation. So in my case, I will be talking about the new startup law and also the new digital nomad visa and also the different tax regimes that we have here in Spain. So basically, the new startup law, it's a law that it was implemented in January 2023. So it's fairly new. It's a law that it was made to attract for investment and talent here in Spain. In this new law, there's the definition of what's a startup and also the main requirements of the startup. So basically, a startup in terms of this new law, it's defined as a company that can be older than 5 years. The company can arise from a merger or a division or transformation of operations of companies. The company can have distributed dividends or can distribute dividends in the future. The company can be listed on a regulated market, and also the company needs to have its registered office in Spain, or in case if it's a permanent establishment, it needs to be in Spain. Also, the majority of the workforce, so let's say the employees need to be settled in or based in Spain. At least 60% of the employees need to be in Spain. Obviously, there needs to be an innovative character. And finally, the company can have an annual turnover of 10 million. So it needs to be below that. Another big question we had on a previous webinar is like, who decides if the company qualifies as a startup? So there's this company, it's called ENISA, which decide if your company qualifies as a startup or not. It's basically the innovative national company. So there are many benefits in terms of this new law. Basically, this new law it pretends to reduce the corporate tax from 25% to 15% for a maximum of 5 years, and it starts to count the first year the company has benefits. Also, there can be a tax deferral for the first 2 years the company has benefits in Spain. There are also huge benefits for foreigners. The main benefit is that the foreigners, they can apply to the non-resident income tax, which means that instead of paying the progressive tax rate of 50%, they only pay 24% on the incomes that they generate here in Spain. It's something similar to the BECKER law, which we will discuss later in the webinar. One of the benefits compared to the BECKER law, it's that instead of being a tax resident in Spain for 5 years, instead of being 10 years, it's only 5 years. So there's a flexibility on the creation process in terms of whenever you create a startup. Basically, it has been communicated that the notary and the registration fees are eliminated if the company is it's incorporated electronically. Also, in addition, it will be possible to register the company only in 6 hours instead of the normal way, which normally takes 2-3 weeks to register the company. And also, there's a lot of facilities for investors, because obviously, as you know, whenever you set up a company, you set up a startup, investment is one of the biggest things. Money is required, and most of the companies require external investment. So basically, there are tax incentives for these foreign investors here in Spain, and it makes it easier for startups to access capital. So here, as you will see, we'll talk about the digital nomad visa. The digital nomad visa is a type of visa that it was introduced in this new startup law. This visa is it's a residency permit that it's extended up to 5 years. It's different from the BECKER law, because the BECKER law lasts 6 years. The digital nomad visa, it's up to 5 years, and it will allow non-EU citizens the fact of being able to work remotely here in Spain. Basically, there are two different ways to apply to this type of visa. One way, you can apply whenever you come into the country and you enter with a tourism visa. You can be as a tourist here for 6 months, and during these 6 months, you are able to apply to this type of visa, which will give you a 3-year visa, and then you can apply for the 2 extra years. And then the other way to apply, it's by being in the country of origin. You should go to the Spanish consulate in that country, and then you'll be able to apply for a 1 year visa. And then when you are here, you can apply for the rest of the years. Here we have two different types of employees that come to work with this type of visa here in Spain. Either employed workers, so are these workers that are employed by a foreign company and they need to work remotely, in this case in Spain, or self-employed workers with several clients that are also outside of Spain. Therefore, there are some requirements for the application. The main requirement is that the company that is actually your employer or the clients that you have, they need to be outside of Spain. All the incomes received from by a Spanish company can represent more than 20% of the total. You need to demonstrate that you have been working for the company, or you have a relationship with your clients, in case you're being self-employed, for at least 3 months prior the application to this type of visa. You need to have at least a contract of 1 year with the company you're being employed outside. You can have criminal records, because you will need to submit a no criminal record for at least 5 years. You need to hire private health insurance in Spain whenever you want to apply this. And if you are actually employed by a company, the foreign company would need to register here in Spain, obtain a tax identification number, and then pay Social Security through a Spanish bank account. If you have a contract with a foreign company, it will be essential that this company specifies that you are allowed to work remotely, and that it's something that it's beneficial for the company, and that the position that you currently have allows you to work remotely. Also, if you're a freelancer, at least for one of the companies outside of Spain, in the terms and conditions that you have with this with the company or the client that you're working with, it also needs to specify or say that you are able and allowed to work remotely. So some of the tax benefits regarding this new nomad visa, as I mentioned earlier, the main benefit is that you will be treated as a non-resident instead of being on the progressive tax rate of that can go up to 45–50%. So I was talking about the different tax benefits of the new nomad visa. Basically, the main benefit is that the person that has applied to this type of visa, they will be taxed at a 24% tax rate on the incomes received here in Spain, because they will be taxed as non-residents instead of being taxed as residents and being on the progressive tax rate that can go up to 45–50% depending on the incomes that you generate. In case you haven't been in Spain for this will apply, and you'll be able to apply for this in case you haven't been resident for the past 5 years. Which is the difference in terms of the BECKER law, because the BECKER law, it's 10 years instead of 5, so it's an advantage. Also, in order to apply to this tax benefit, it's a different procedure than the visa procedure. Basically, you would need to go to the tax authorities in Spain after you have already applied to the visa, and you will need to tell them that you are on the digital nomad visa and that you would like to use or benefit from this tax regime. Basically, another thing regarding the digital nomad visa is the fact that of being non-resident, you won't need to file the Form 720, and also you won't need to file wealth tax here in Spain. That's an advantage. As a difference with the BECKER law, it only lasts for 5 years, while the BECKER law it lasts 6 years. But it's something that it's still advantages. So the last question is, can I work in Spain with this new visa? Yes, you actually can work in Spain, and you actually can work for Spanish companies, but there's a catch. Only 20% of the incomes that you receive can come from a Spanish company or a company that is settled here in Spain. And lastly, I'm gonna talk about the BECKER law and this tax regime that a lot of people are enjoying here in Spain. Basically, it was a law that it was implemented a few years ago. It was implemented because of a famous footballer called David Beckham. And basically, it enables foreigners who move to Spanish territory to pay a flat fee of 24% on the incomes they obtain here in Spain, instead of going through the progressive tax rate on their worldwide incomes, which is a huge difference because compared to other countries, taxation here in Spain for individuals, it's quite high, and a lot of people want to avoid this. So it's a tax regime that is very, very beneficial for foreigners, and it also makes the country a little bit more attractive for foreign people. So basically, it's a flat rate of 24% up to the amount of 600,000 euros. Once you go over the 600,000 euros, you go to the progressive tax rate to 45–50%, depending on the region you're in Spain. It lasts for 6 years, so the first year you're in, and then the following 5 years. There's a difference with the digital nomad visa and the tax benefits. It lasts 1 more year, but one of the main requirements that is different from the previous from the digital nomad visa tax regime, it's that you can have been the expat can have been resident in Spain during the past 10 years, while with the digital nomad it's only 5 years. Also, another huge requirement is that the foreigner must have a job contract, and it needs to be signed by a Spanish company. Also, the director cannot possess more than 24% the company in case a director of a company comes to Spain. And finally, the core of the workers' professional activities must be in Spain. And basically, that's it in terms of the BECKER law. If there are any questions, we will be more than glad to answer them. You can type them in the group chat, and we'll be glad to answer them. In case there were no questions, we will end up the meeting here. And here you have our email addresses and also our contact details in case you want to reach out to us in the future, and we will be more than glad to assist you on anything. We'll leave a few moments in case you wanna type some questions.
Yes, Ricky, can you hear me?
Yes.
I have one question. Just you were talking about the nomad visa before, and the following question has come up. Can my family also apply for the same nomad visa as dependents? And if so, should it be in the same application, or can I bring them at a later stage?
Yes. So basically, once you make the applications, you can add your dependents, so your wife and your family to the application, so they can have the same benefits as the main applicant. So yes, indeed, you can add them.
Okay, that's clear. Thank you very much.
Okay, so if there are no additional questions, we'll just finish the webinar here. Well, it was a pleasure having you all here in this webinar. We will be doing future webinars talking about different subjects and different topics. We will all let you know in our socials, and we'll hope you see you all in the next one. Thank you so much, and have a great rest of the day. Thank you.
Thank you. Bye.